Everyone, in this video I am going to talk about chart patterns for the active trader. Actually, the active traders need to learn about the various chart patterns, but today I am going to talk about the important chart patterns that is very much necessary for the active traders. Now, there is a myth about the chart patterns that chart pattern don't work. Is it true? That is usually said by the people who tried and failed to use them. Actually, for me they work in that they may help me decide on taking a position, when to enter and sometime when to exit. So if we use the chart pattern properly, then it might help. Now let's look about chart types. This is example of line chart. This is the most basic of all the chart, and it is just a line that connects the closing prices over the time frame. That is, it does not give any trading range. Now another type of chart is a bar chart. Here, vertical line represent high low of the day, whereas the horizontal line represent the closing price. We can see in the figure, this is the daily high price, this is the closing price and daily low price. And generally in the bar chart, red is down whereas blue or black is up. And another type of the chart which we use to analyze the candlestick chart, and generally the vertical line representing the trading range and the white bar represent open and close. White bar up and closes above opening ranges. Red bar is generally down. Black bar is up but closes below the opening price. Now another time this is time scale. Date along the bottom of the chart. Common type are intraday, daily, weekly and monthly. Now this is an example of the basic time chart. This is a daily chart and this is a weekly chart. Now volume. What is volume actually? Actually the volume we use in the trade is amount of share that trade hand between seller and buyers. Now price movement more significant when volume is above average. Now what is that is price movement? If the volume is below the average, then maybe price movement is not too significant, but when the volume is more, then price movement is more significant. Now here we can see the average price and volume. This is the average price, average volume, this is the average volume, and we can see the price. Now the trend, our friend, when you are in the trade market, that is, we can see the trend, general direction of the stock. We can see that this is a upper top trend. That is, we can see the high gains and high lows. High gains, high lows. Sometimes trend is difficult to see, as here we don't know the actual trend is going to be upward or downward like this. Now how can we find the trend? There is a simple formula, that is, simply put the line on the chart to represent the overall trend. We can see the trend If the market is going upward or downward, we can know it's from the simply drawing the chart. Now upward trend connecting the lows represent the support. That is, how to draw support is we can draw a line connecting this low support, lows that represent the support. This line is a support. Now channel. Another term is channel. What is channel actually? It is a two parallel line that act as area of support and resistance. That is, when we connect the upper, draw a line connecting the upper part, it is a resistance, whereas it's below is support. So in between it is called a channel. Now any breakthrough through the channel, if this line go through, if these lines goes out of channel, then we can say the break, that is break of a trend. That is, if it going upward and it's go outside the chain, then the trend might break. That means its upward trend made change to declining trend. Now another thing is we know is highs and lows. That is market, when it goes upward, we can see that the up volume is increases, it increases, but when the market move downward from here, it's called its swing. And we can see that the pattern is broken. Pattern is potentially broken. Possible range of consideration is there. That means a new high is not put in, then the trading pattern is broken, and other scenarios must be thought of. Now let's go look at some of the candlestick pattern. And firstly we go to the momentum style candlestick. Actually, what is momentum style candlestick? We can see like this. This is a momentum style candlestick. Now this is called the momentum style candlestick. That is full candlestick. We can see this full candlestick with close near the high in uptrend. This now another type is low interest pullback. No conviction to the shorter side. What we don't mind seeing is after a lazy pullback, a climatic type of price action is they can point to the turning of price back in trend direction. Now reversal chart pattern. You can see in this inverse head and shoulder the same thing we talked about earlier about trend structure. That is, left structure is lower head. A lower high is put in. When we then see a lower low with head, then another high, the right shoulder is higher than the head. Traders generally wait for the neckline, the connection between the two peaks, to be broken before trading. When I see this pattern, I too look for the price rejection at the right shoulder and aim in the trade before neckline break. It is advised to consider volume in this information. Lighter volume in the head as well as in the right shoulder. The left shoulder can see normal volume. Of course, using volume in share stocks, share exchange might be impossible. In that case, simply consider the reading trend structure to see lack of convection into this level. It's break in down trading market structure is high-low plots and is confirmed upon new highs. Now another pattern is double top and double bottom, that is W and M pattern. Now these are the simple pattern and the names are accurate. Price plot to top or bottom in same price zone. This is a double bottom. Remember, there are price zone and price doesn't have to be exact. What do you see then? The low at 1 is normal in a downtrend. Price rallies, put in peak and then fall to point 2, that is normal. Refer back to our highs and lows. Price has failed to make lower lows in bear market and put the trend into question. When the price take out the peak on closing basis, we have the start of higher high, which means the possible of trend is forming. As with the head and shoulder chart pattern, volume can make up the pattern, but to be honest, do not consider volume in any decision. A double bottom has a W shape and is a signal for bullish price movement. A double top has a M sign shape and it is indicate a bearish reversal in the trade. That means a W shape is a bullish price movement and M is a bearish movement. So we should take a note about this chart. In this video, we'll look at a various type of charts and its significance. In the upcoming video, we're going to look for another type of charts, important charts that traders should know while trading. And that's all for the video. Thanks for watching and don't forget to subscribe this channel.